IBM beat on the top and bottom lines. Guidance is a raise on free cash flow. I spoke with CEO Arvind Krishna about the quarter. We'll share what he told me, but first the numbers. Revenue was $16.98 billion versus $16.59 billion expected. Non-GAAP EPS, $2.80 versus $2.64 expected. For the guide, IBM reaffirmed constant currency revenue growth of at least 5%, but said cash flow will be more than $13.5 billion. That's a change from about $13.5. Here's what CEO Arvind Krishna told me about the quarter. On the segments that did best, he said, we did well in software and did really well on the mainframe. Those are probably the two standouts for the quarter. Now, of course, because those two are both where the last dollar is much more profitable than the first, that results in then the bottom line beat, and we're carrying forward some of what we beat, but a bit more. So we're raising guidance on revenue for the full year, and we're raising guidance on free cash flow for the full year. Consulting was flat, better than negative, which it was in the first quarter, and I think that just given where we are, but also where others are, I don't expect a lot of improvement this year, but I do expect next year to be better. I asked him if the days of bottom line growth and top line stagnation for IBM are officially over. He said, you cannot engineer free cash, okay? And I said, revenue growth. That's what he's referring to when he set the targets for the street. You can't hide revenue growth. You can engineer earnings. You can do other things. So that's the reason I picked those two metrics. He's talking about free cash flow and revenue growth. So now the third part, we are very clear on our model. Software will approach double digits. So 7 to 10% is the range we're going to be in. Why do I feel comfortable about it? 80% of our software book of business is actually ARR, our recurring revenue. On the global economy, he said, overall, on the macro, I actually feel good right now. I would tell you that contrary to some of the doomsters that we're talking about sub 1% GDP growth, I just don't see it. I think we're going to be around 2 here in the U.S., probably mid-2s globally. You're at 3 points of inflation, so that would mean that actual rates, everything is up by 5 plus on average. Pockets will be 7, 8, 9. There'll be pockets at 1, 2, 3, and that's why I feel good about the overall macro. Are there going to be tiny pockets of, I'll call it headwinds? Sure, the Middle East is one of those pockets right now, not Saudi and UAE, but if I go a bit further northwest, that's certainly an area of concern. And I asked him about Brand America, which he flagged as a concern last quarter if the U.S.'s reputation were to worsen. He said, I think back in April, there was a lot more talk about the anti-American sentiment, whether you heard it from Canadians, you heard it from people in Western Europe, not so much the U.K., and even portions of the Far East. I think that the emotion has gone away. People have realized that we need to be part of a global trading system. And so I sense that that emotion and the heat has decreased dramatically, and people have said, okay, let's be pragmatic and get to an outcome that makes sense for everyone.